Hello there, this is FairBinaryOptions.com, and I would like to talk about the US dollar and the Japanese yen for this Sunday, as I really like this currency pair even at these current levels. I am looking for market to go and make another attempt at the highs after we dropped like a rock with Miss Yellen speaking in the press conference here. Market retraced and then all the way was almost pushing through the 118 level. However, note the structure of these waves here, as they are no impulsive. If they are no impulsive, they can only be corrective because we only have two possibilities in here. So what I'm trying to say is that this is nothing but a contracting triangle that broke higher. And judging by the nature and the structure of this triangle, we are talking about a triangle that actually has a fourth wave in terms of Elliott waves. And if this is a fourth wave, then the previous wave definitely is nothing but a third wave. So 1, 2, 3, 4, and then we should look for a fifth wave. But we have a problem with this fifth wave, as I don't think it is completed here. Most likely the fifth wave is still on the way to be completed way higher. You might say, alright, what would be the appropriate place for the fifth wave to end? I would say somewhere above 124. So let's just buy call options. Well, it's not that easy and it's not that simple. The reason for that is that I'm looking for a possible rising wedge to go, something like the first wave to be here, then to have a second wave, but definitely not to be done here, so the second wave to still be formed, something like this, or the second wave to be done around here, then the third wave, a simple fourth wave, something like A, B, C, D, E, or something like this, and then a fifth wave with the whole structure to have again the shape of a rising wedge, something like this, and something like this. Now in a rising wedge, the most time consuming is the second wave. So from my point of view, over lower degree, we barely have the first wave being completed here. Next week is going to be an important one from the non-farm payrolls point of view, as it is going to be released on Friday. And that would be the major event on the whole week. Again, I don't think that the second wave is done. Most likely will be done here. So in terms of putting the non-farm payrolls in this equation, I would say that we will have a jump on the US dollar Japanese yen into the non-farm payrolls, something like this, and then the market to come for the second wave in here. Remember, this is the daily chart. Now, 1 week means that we count here something like 5 candles or 6 candles if you put the Sunday candle as well. And from my point of view, we need around 2 or 3 weeks still for the second wave. All in all, what I would like to do is that on the opening on Monday, just to go and buy call options, waiting for market to go above 120 again. And then on any revisit below the 120, we should only buy call options, but with long-term expiration date. So the plan is the following. Number 1, buying call options by the time markets are opening on Monday with end of week expiration date. And number 2, after 120 mark is reached, buy any dips into 119.50 area with 1 month expiration date. Thank you for being here. This is FairBinaryOptions.com. We just looked at the US dollar and Japanese yen in a way of forming a rising wedge. Well, it is a bearish pattern in the end, but here at this very moment looks really bullish. Thank you and bye bye.